Hello, welcome to my channel. My name is Jana Cristo, and today's video is an answer to one of your questions. What type of accounts do you need to open when you start your property management business? Whose names should be on those accounts? And I will also discuss in more details the opening of a trust account. This video is sponsored by Rentsy.com, a resource for landlords and property managers. When you open your property management company, there are three types of accounts you need to have. Well, the first one, of course, is your default property management company account. This is where you collect all of your property management fees, commissions, and from this account, you also pay all expenses related directly to the running of your property management business. The next account is rent income account. And rent income account is where you collect rent and other income for all properties, and from which you pay vendors, you pay expenses directly, and owners directly, everything directly related to the properties you manage. You can have it, the rent income account, you can have it two ways. You can have one account for all properties. And by the way, this is in your property management company name. And you can have one account, or you can have a separate accounts for each property. That, however, most property managers have one account for all properties for rent income. And the third account, the third type, is trust account. This is where security deposit and prepaid rent goes. The trust account, when you're opening a trust account, you have to talk to your banker and open a proper trust account. Most of the time, and most property managers just open a regular business account. They call it trust account. This satisfies the real estate commissions, because if you're not commingling and you're just keeping deposit, that's okay. However, there are two things that you need to be aware of when you have this account. First, if the account is regular business checking account and you just call it trust account, that account is only insured to $250,000. So you need to make sure that you are aware of that. Banks go out of business rarely, but it does happen. And if it does, and you have more money in that account and it doesn't belong to you, then it's a problem if you have only 250,000 insured. And it doesn't take a lot of properties to get over 250,000. So this is one of the things that you should be aware of. And the other one is, because this account is in your name, not your name, but your company's name, and it has your tax information. What happens if you have a judgment against your company? It happens. That account could be frozen if it's not true trust account. That account could be frozen and you will not be able to pay back deposits. So when you're opening an account, talk to your bank. If they don't understand what you need, talk to more than one bank and explain that you need an account, you're holding money for other people, and that account should not be nobody should be able to freeze that account. So make sure that this is your banker is aware of your needs about the trust account. The other thing I wanted to mention is interest. You can, every state has different laws whether you can collect interest on security deposit held in trust account. Some allow you to collect it, but you need to disclose it. Some don't allow you to collect it. You can go to our website, rentsy.com, and under landlord-tenant laws, you can find all state laws and go to security deposit and look up your state and to find out what's available to what you need to do about that. One more thing, if you have a trust account and your bank has something called analysis business checking, you can collect a fee. They call it credit really on your daily balances, and when you have this large amount that you hold, that could add up to a pretty penny, which will pay your banking fee and also pay some of your bills. You have to, of course, disclose that. But if your bank, and many banks are actually offering, whether they talk about it or not, this is not an interest. It's called credit on daily balances. So just you're aware of that. So that's it for today. Thank you so much for listening. Please subscribe, support this channel, subscribe. You're helping me a lot. And I will be happy to make more videos like this one to answer any other questions you have.